Welcome back to Fast Money. Robinhood shares hitting a record high, up nearly 13% today. The company announcing that it will allow European customers to trade over 200 U.S. stock and ETFs. CNBC's Mackenzie Sigalos is in Cannes, France, with the details. Mackenzie.
Hey, Melissa. Robinhood just launched what may be its most ambitious crypto push yet, offering tokenized shares of OpenAI and SpaceX to users across Europe. Now, this is a landmark move because neither company is publicly listed and access to their equity has been limited to insiders and the ultra wealthy. So these tokens are part of a broader rollout. Robinhood plans to scale to thousands of tokenized US stocks and ETFs with 24/5 trading in Europe by the end of the year and eventually go to 24/7 once its own blockchain launches. Now, it's not just about listing assets anymore. Robinhood is really trying to rebuild the financial rails with this own blockchain project. And this comes as staking just relaunched in the US, letting users earn crypto yield in the app.
In a surprising and potentially game-changing move, Robinhood has officially entered the Ethereum Layer 2 race. But this isn't just another platform offering token swaps and staking. Robinhood is launching an actual blockchain, a self-custodial Ethereum L2 chain built using Arbitrum's Orbit tech stack. For years, Robinhood has been known as the go-to app for simplified stock and crypto trading. Now it's pushing deeper into crypto's infrastructure, not just selling the shovels, but laying down the roads. This new chain will allow users to move assets like ETH, stablecoins, and potentially tokenized stocks, all while maintaining custody of their wallets. And one of the most attractive features, gasless transactions. Robinhood plans to abstract away Ethereum's notoriously complex gas system, sponsoring gas fees in the background so users can simply tap, trade, and stake, much like they do in Web 2. But this isn't some obscure DeFi project with a niche audience. Robinhood serves over 23 million users. Many of them are crypto curious, and millions already hold Ethereum. By building on Arbitrum, Robinhood avoids the challenges of creating an entirely new chain. They get EVM compatibility, access to Arbitrum's security, and a path to connect with the broader Ethereum ecosystem, all without reinventing the wheel. Contextually, this could be huge for Ethereum. While Bitcoin has stolen headlines in 2025 with double-digit gains, ETF inflows, and geopolitical hedging narratives, Ethereum has struggled. Year-to-date, ETH is down over 25%. It's lagging not just in price, but in attention. The rise of Bitcoin ETFs and institutional inflows has made BTC feel like the adult in the room, while Ethereum, weighed down by slow rollouts and layer 1 gas costs, has lost momentum. Robinhood's entry could shift that narrative. According to Robinhood, this layer 2 is more than just a network. It's a financial operating system. They envision a self-custodial wallet that supports ETH staking, real-world asset tokenization, DeFi applications, and even crypto-based futures. Imagine holding stocks, ETH, and stablecoins in a single decentralized wallet, tradable on-chain in seconds. That's what Robinhood wants to build. Their strategy reflects a belief that the future of finance isn't just mobile. It's on-chain, but this move also raises critical questions. First, decentralization. While Robinhood is leaning into self-custody, it's still a centralized company with shareholders and regulatory exposure. Will users truly have control, or will Robinhood retain back-end influence over user keys, permissions, or upgrades? And second, gas subsidies. While offering gasless transactions sounds great, who pays for those fees long term? Can Robinhood sustain that model as transaction volumes grow? Still, the potential upside is massive. If Robinhood executes well, Ethereum stands to benefit directly. More ETH staked, more ETH held by users, and more daily usage across L2 networks. Ethereum's future depends on usability. And this is one of the most usability-focused attempts we've seen from a mainstream company. And Robinhood isn't stopping at staking or swaps. They're looking into tokenized stocks and ETFs, essentially turning your traditional brokerage account into programmable money. This would allow 24/7 trading, decentralized governance, and seamless asset blending. Think about it, owning shares of Tesla, ETH, and USDC in one wallet with smart contracts dictating how they interact. All gasless, all mobile. That's not just crypto, that's a redefinition of personal finance. For Ethereum bulls, this could be the beginning of a new narrative. The 2020 to 2022 bull run was fueled by DeFi and NFTs. The next one could be driven by user-friendly layer 2s that merge crypto utility with traditional finance adoption. If Robinhood's L2 succeeds, it could put Ethereum back on the institutional radar, not just as digital oil, but as the rails for modern financial infrastructure.